Hello YouTubers, Alaska Prepper here. Time for your wake-up call. I have a real quick article to go over real quick here, and I think you guys are going to find this one pretty interesting. This one was just published today or yesterday, so it's not old at all. And here we go. Executives are selling off their company stocks at a record pace. Corporate insiders are dumping stock in their companies at a rate not seen in 10 years. With September not yet over, stock sales by company executives reached $5.7 billion, according to data from Trim Tabs Investment Research, the highest September in a decade. August's $10.3 billion in insider sales also reached a 10-year record. At the same time, stock buybacks are roaring ahead, pumping up U.S. sales prices to new heights. Companies this year have announced $827 billion in spending to purchase their own shares, well above the buybacks that took place during all of 2007, which set the previous annual record. Insiders have been committing lots of money for stock buybacks, and they are not doing buybacks because they think stocks are cheaper. They're doing it to pump up the stock so they can sell it, said David Sanchi, Director of Liquidity Research at Trim Tabs. Ladies and gentlemen, something you have to understand about stock buybacks. It's an illusion. It creates an illusion. So a company, instead of taking capital and investing it back into the company in the form of infrastructure, in the form of training their people, in the form of building more buildings, making investments on hiring more people, they take the money and instead they buy back their own shares, creating, I guess, a bit of a void in the market. And what does that do? That makes it look like their company is more valuable. So let me give you a quick example. Let's say I own a factory that makes sandals, all right? You know, like the sandals that you wear at the beach, right? And let's say that my company is doing really good, and let's say my company's worth $1 million, all right? And you know, let's say that I have 1 million shares, so each share is worth $1. So let's say that, you know, my company's worth $1 million, okay? Because it's doing really good. It's genuinely worth that much. So now let's say that I own 100,000 shares of that. And then let's say that I borrow money at a very low interest rate and I buy back another, let's say, 400,000 shares. And now the shares are worth more than $1 a piece, because the more that you buy, the more of a void that there is in the market, the higher the share is going to go up, because, you know, it's the law of economics. One of the laws of economics is supply and demand, right? So I'm creating a shortage in the market by buying a lot of shares, and now it makes it look like these shares are worth more. So now my shares are maybe worth $1.50 or $1.25, something like that. But think about this. Is the company as a whole really more valuable? I'm still making the same amount of flip-flops I was making before. I still have the same number of employees that I had before. I still have the same infrastructure that I had before. Nothing has changed in the company. The company's footprint is still the same. The only thing that has changed is that I am now borrowing money at a very low interest rate so that I can buy shares in the market and create somewhat of a void for those shares, or create a shortage of shares, making it look like the shares are now valued higher, when in fact the underlying value of the company is still the same that it was before. It just looks like it's worth more now because I'm buying my own shares. And then what do I do when the shares get to a price that I can make a very nice profit? I go ahead and I sell them. And then I make a really nice profit in selling them the shares go down a little bit, but I still made my profit. I can pay back my loan, and I have all that extra money there that I drained from the system. All right. So what you have to ask yourself when you look at stocks like Amazon or Facebook or Tesla, or Google, are these companies really worth what they're saying they're worth? Is Apple really worth just shy of $1 trillion? Are they really worth that? Do they still have the same footprint that they had before? Are they still making the same things with the same amount of quality as they were before? Do they still have the same number of employees? When you look at places like Tesla, Tesla has never turned a profit. All right? I believe, okay? If you can prove me wrong, please do. I'm always open for that. But as far as I know, Tesla has never made a profit. But their shares are worth, what, like almost $300 a share. But they've never, ever made a profit, okay? Same thing with Amazon. I mean, I love and I hate Amazon, all right? I really like Amazon because of convenience. I don't really like them because they're going to end up destroying brick and mortar. And that's going to have its own consequences. But is Amazon really worth $2,000 a share? All right? Is their company actually really worth $2,000 a share? So that's what you have to ask yourself. Why are these guys buying back their own shares? That's why. Because in the end, the insiders, the guys that really know what's going on, they're going to sell their stuff way before the average folk, or way before the pension plans, retirement funds sell their shares. They're going to get out way before that. And that's what's happening right now. Okay, so let's carry on. Some investors like buybacks because they boost the value of the rest of the company's stock. You see right here, this says it all. They boost the value, all right, of the rest of the company's stock. They boost the value of the stock, of the paper. That's the only value that is being boosted, is the value of the paper, not the actual value of the physical company, okay? They also bolster top executives' pay, much of which comes in the form of shares. But they're purely financial play that don't improve a company's position in the long term. And that's what I was getting at too, ladies and gentlemen. It doesn't improve the company's position in the long term because the company's true value, their true physical, tangible value hasn't changed. It's just the value of the paper, okay? The way investing in equipment, you see, here we go. The way investing in equipment or hiring might. And I haven't read this article, ladies and gentlemen, before I made my my little rant over there. I haven't read this article. I just read the headline and I'm reading it with you. But this is saying here pretty much what I just said. Stock buybacks have seemed to be the main use of the corporate tax savings this year. Acquisitions haven't been particularly high, and we're not seeing much wage growth, Sanchi added. Trim's tabs figures underestimate the true amount of corporate insider activity, Sanchi noted, because only certain insiders, a company's highest-ranking executives or directors, as well as all investors who hold more than 10% of the stock, are required to disclose stock sales. So non-executive employees who sell stock aren't included in this measure. So the numbers that they gave us of how much insider stock has been sold this month thus far is probably lower than what it really is. It's probably higher than what they're saying. Okay, buybacks have come under scrutiny of late, with secretaries and exchange commissioners Robert Jackson calling them out on a recent speech. We give stock to corporate managers to convince them to create the kind of long-term value that benefits American companies and the workers and communities they serve, he said. Instead, what we are seeing is that executives are using buybacks as a chance to cash out their compensation at investor expense. In June, a group of senators asked the SEC to review its buyback rules. And I guess Santishi said insiders are doing one thing with their own money and another thing with shareholder money. So there you go, ladies and gentlemen. The insiders are getting out. It's go over to ITM Trading to Miss Lynette Zhang's YouTube channel. She talks about this all the time. Okay, so insiders are getting out. Are you? Okay, are you getting out? Remember when you were growing up, and this may have or may have not happened, but when you were growing up, your mom and your dad maybe gave you some advice, and they said, if you want to be successful, then hang out with successful people. Okay, these guys are successful. Is the way that they achieve their success moral or not? That's not for me to determine, really. You know, I have my own opinion. However, these are the guys that are getting out. The guys that are at the top, the guys that have made it, they're getting out of the stock market. They're getting out of their own companies. Why? Really simple, ladies and gentlemen. I mean, I'm a layman. All right, I have a 2-year associate's degree in general education. Really simple. You know why? The exact same reason. If you guys follow, if any of you followed the boom in the crypto market last year, where it went up to like, where Bitcoin went up to like almost $20,000, the same reason all of those people sold at the top, because they knew that there were going to be a whole bunch of bag holders, and a bag holder is the person left holding his shares when they're at almost record bottom. Okay, that's why they're getting out, because they see something's happening. All right, they can tell that this is what they do for a living, and why wouldn't they get out? I would too. Okay, so having said that, let me go ahead and just, this is completely off topic, but I'm just going to go ahead and show you this. I stole this article from Diamond over at Oppenheimer Ranch Project. All right, but I just wanted to show you this real quick. This is an article. I'm going to try to close this thing out here. What am I doing? Get out of there. All right, I'll leave it there. Okay, so it says here, this is an article from the Daily Mail, and when was it posted? It was posted today. And it says, start stockpiling food now. Volcano experts warn a massive eruption could disrupt the global climate, causing crop failures and mass starvation. All right, ladies and gentlemen, I'm going to go ahead and leave this link and you guys can read it. But I'm hoping that just reading that will encourage you all to go ahead and read the link, because read the article. I'll leave the link. It'll encourage you guys to go out and get a bag of rice today. I should buy stock in rice since I promote it so much. But remember, stock is just paper, so I'm not going to do that. I'd rather just buy the rice. All right, so ladies and gentlemen, I'll read this again. Stockpiling food. Start stockpiling food now. Volcano experts warn a massive eruption could disrupt the global climate, causing crop failures and mass starvation. All right, ladies and gentlemen, we'll leave it off with that. This is your wake-up minute. So having said that, remember to be good to each other. When good people do good things happen. Remember to reach one, teach one, and repeat. If we all did this, the world would be a better place, and you know that it will be a better place. Many blessings to all of you and your families. This is Alaska Prepper, and I'm out.